Hello, a volatile week for energy prices, so let's take a look at the week's actions in some more detail. Brent closed flat on Monday as supply concerns eased after Iran insisted it had total control following the anti-government demonstrations. Prices jumped over $2 per barrel on Tuesday. Protests against the Iranian government escalated, and statements from President Trump warning of possible military action supported the upward movement. President Trump's proposed 25% tariff rate on US trade with countries also trading with one of the largest producers in OPEC also provided significant supply concerns. The bull run eased marginally on Wednesday as President Trump said military action against Iran was not imminent. Brent then fell $2.38 per barrel on Thursday as President Trump played down the prospect of war with Iran. The weekly EIA report also showed an increase of 3.4 million barrels in US commercial crude stocks. Last night, front-month Brent closed at $63.81 per barrel, which is up $0.26 compared to last Friday. Prices rose on Monday and most noticeably on near-term contracts. Prices were supported by forecasts of increased demand amid lower wind generation and colder temperatures. Prompt and near-term contracts rose on Tuesday due to an increase in demand. Curve contracts settled relatively flat as market participants await geopolitical developments. Prices continue to be supported on Wednesday by lower temperatures and increased demand at a time when storage withdrawals are a consistent factor. Reports suggested temperatures would drop 6 degrees below the 5-year average for the time of year, added to the bullish sentiment. Further out on the curve, contracts eased. Thursday's session saw the bull run on the near curve continue with tightness in LNG supply and outlook of colder temperatures. Last night, near-term contracts closed higher compared to last Friday. Summer 26 gained 4 pence per therm, while Summer 27 and 28 lost 0.3 and 1 pence per therm, respectively. Prices moved in line with gas on Monday. All contracts rose, although prompt and near-term contracts saw the biggest jump. Front-month February gained £5.23 per megawatt-hour session on session. Most contracts rose on Tuesday, tracking the wider energy complex higher. And bullish gas pressured near-term contracts and bullish carbon pressured the curve throughout Wednesday's session. Most contracts then continued to rise on Thursday, although some weakness was seen on contracts from Summer 27 onwards. Last night, all power contracts closed higher compared to last Friday. Summer 26 gained £3.3 per megawatt hour and Winter 26 gained £2.65 per megawatt hour. You can download the full version of this market report from our website. Thanks for watching. See you next week.